Reuters.
The International Monetary Fund warned turmoil in credit markets could spread, posing further losses to banks, and cautioned that risks to global economic growth have increased. It estimated that potential write-downs and losses to banks had reached $945 billion by March 2008. And Colin McLean, managing director of SVM Asset Management, told Reuters the worst was still to come.
We've seen some sharp rallies in the bank sector, but I don't think we've yet seen the low point that they're going to reach. There's still some worse news to come out, and the interbank lending market hasn't really picked up yet. So I think it is going to take a period of at least several months, if not to the end of the year, before we're going to get all the facts out. And then in future after that, I think the earnings model may be diminished in the bank sector with more regulation, perhaps higher liquidity requirements and some changes in business practice. So I don't think they'll necessarily recover back to where they were.
The IMF also warned that signs of a downturn are becoming evident in some European housing markets and said if economic growth slows in Europe, repossessions and write-offs will rise. And as if on cue, British house prices fell in March at their sharpest pace since the recession of the early 1990s. The Halifax, the country's largest mortgage lender, said house prices fell 2.5% during last month, more than 6 times as much as analysts had forecast, and the largest monthly decline since September 1992. But some economists are telling people not to panic.
It's very dangerous to take too much notice of a single month's figures. In December, for example, Halifax reported a 1.4% rise in the index, which frankly was complete nonsense. So much better to look at the index over perhaps a rolling 3-month period than a single month.
But the news raised expectations interest rates will be cut this week. European shares extended losses in afternoon trade. The FTSE Euro First 300 was down 1%, with banks taking the most points off the benchmark over continuing concerns about the impact of the credit market crisis, and after BNP Paribas' chief executive said the bank may not match last year's investment banking revenues, as the trading environment was, as he described, very adverse. Stephanie McIntyre, Reuters.